Right. Chris, what's happening, bro?
Hey, what's going on, man? It's
It is
Tuesday.
Tuesday.
It is the next to last Tuesday before Christmas, which means that it's
Yes.
also like the third to the end. There's only two more Tuesdays after this one in the year of 2024. Can you believe it? It's amazing,
Truly
wild.
amazing. This year
Maybe,
has
maybe.
flown by, man. It's
Yep,
so fast.
yep. So fast. Welcome everyone to the Practice Playbook, the show where we help firm owners and wannabe firm owners on their road to or to navigate the road. Oh my gosh, to navigate the road to their modern firms. Oh my heavens, I am Chris Geno. That's me right there. This thumbs down on my intro today, and he over there. That's Jay Kimelman. You can see his name down there. And we are the hosts of your show today. Last week we talked about automations, and Jay, we need an automation for the intro so that I don't do it that bad again. Holy
We do,
smokes!
yes. And
Yeah,
speaking of which, I love the fact
yeah.
in the X post, you said he probably automated the social post
Oh
for
yeah,
this. I did.
absolutely.
Yes, I
I
did.
thought you probably did.
So yes.
I saw them come up at about the same time, and I was like, well, I'm pretty sure I know how this happened.
Yep.
We highlighted how automations can make your life easier, like we've just talked about here, how they can improve relationships with your clients, and how they can get back time for both yourself, your team, and probably your clients too, if you're doing them in the right way. This week, we're going to look forward to 2025 and highlight some interesting trends we expect to see hitting even bigger, or like highlighting even more in the next year. But before we get to that, let's get to the news. In tax news, the just as a reminder, I think that this is not new news, but as we get to January, it is a point of note. The 1099 thresholds for 1099Ks are dropping. So for 2024, that's a $5,000 threshold where it used to be $20,000. And for 2025, that's a $2,500 threshold where, again, in 2023, it was $20,000. Now,
They're
eventually, that'll get all
cranking
the way
that one
down to the
down.
yeah, that'll eventually get all the way down to the $600 threshold. The same one for MISCs or those guys. So just be aware that if you need a 1099K, that threshold is a little bit more challenging than it used to be. So know that that's happening. Now, the IRS has been really busy over the past year. They're making a bunch of improvements, getting some last minute treats in for tax pros in the tax pro account. So they've expanded the tax pro account to add a virtual assistant. So I think they must have taken that AI guy from the UK and like been like, oh, live that. Let me use that and drop that right into ours. They've added a bunch of different ways to make payments and to view payment plans. They've even added tax returns in Spanish and Espanol for business owners, and so they've done a lot of things that it look like make it easier to pay for the most part, which that kind of makes sense. Uh, so know that you'll probably see a few changes to your tax pro account if you haven't seen those changes already. Know that that's coming.
Gotta say though, Chris, the IRS is very modest. They don't talk about any of these improvements. If it wasn't for these
Mm.
stories coming up, we know nothing about them.
Is that I am not sure. I honestly don't know if that's just a joke or if
It was
or
a
if our man
joke,
Danny
but
was like, or if our man Danny was like, you'll never believe the cool stuff we did. We
well,
made everything so easy.
you'd expect that. Around
Yeah,
the time where they're talking about their strategic plan, they're talking about
right.
all these things they're doing. But it's like
Yeah,
they've made enhancements. It's like, tell us. I want to
yeah,
know. If I have an
right.
account, send me an email or something.
Yeah, yeah.
Or
That would be
send me a letter. You're keeping the USPS busy.
or a fax.
Or
Uh,
fax.
um, sorry. So yeah, so the IRS has been making small improvements, right? They've been using the funding that we've talked about several times on this show to continue to make small improvements in tax pros' lives. So
And we've been talking
keep it
about
up.
that a bit, and they're not really small changes. There's some major changes,
Yeah,
very very good changes that we've been talking about,
yeah,
and let's keep it coming. Like I said a
right.
couple weeks ago, don't cut the funding. We need these tools. It's making it easier for us. We are taxpayers, although we are, tax preparers and tax professionals. Don't
Right.
hurt us, please.
Yeah. Speaking of that, Jay, it seems like some of the future leadership of the United States government might be doing some interesting things, such as proposing to end direct file, which
Yeah.
which I don't really understand. Jay, is there what's wrong with direct file? Why is this even a proposal?
Well, I believe the proposal is by our boy Elon
Oh,
and also Vivek, because I think the infrastructure cost to update this and keep it running is very expensive. And
okay,
I believe they are saying we should end it, but they are saying that it should be rebuilt. And they probably have a technology to allow it to be built cheaper.
yeah,
Now,
that they own themselves.
probably that they would charge a fee for the direct file, but ultimately it probably could be done cheaper. But keep in mind the changes that are made on an annual basis. So you have to build all this flexibility in there and allow it, because year after year you're making changes, and if you're not building it in, it's only going to make it more difficult, and in the end less efficient and more costly to update. So, double-edged sword there.
Yeah,
The key there is to work with your partners, like those that were in the free file program, and have them perform the free file program like it was supposed to be.
yeah,
And we won't have this issue. So
right. Well, let's hope they can figure it out because
let's hope.
we talked a lot about how those improvements and those technologies can really make a big difference both in using the IRS's services, right, and then also in the level of compliance. So both of those things are good. So the easier they are, the better. Jay, do we care at all that the future administration is considering getting rid of the EV credits?
Um, I am sure there are people that care. I bought
Yeah,
my EV and got my credit,
yeah.
and
So
I'm
you
ready
don't
to
care.
dump my EV. So
Oh
there you go.
no.
Oh yeah.
Ooh. Yeah, this seems like one that the Doge team will have some like vested interest in, of
Right.
maybe not getting rid of this one, but I guess we'll see on that as well. Obviously, any of that stimulus has different kinds of values, right? There's all kinds of
Yeah.
values to that, and ultimately, I think it should be up to the people to decide, right? So I
I,
guess
I
we'll
I
see.
honestly do, and as an owner and driver of, well, I have a plug-in hybrid,
Hmm.
so I love my Jeep, and it's great, except for the last 2 months and for 4 months last year. It
Hmm.
sat outside, couldn't take my top off, had to keep putting gas in it, because of issues with the battery.
Yeah.
And,
Hmm.
at that point, it's like, is it truly worth it? I don't know.
Yeah.
So, but overall, we do need to lessen the hold that fossil fuels has on us.
Yep.
Not only for the environment, but for, you know, uh, sustainability. So
Yeah.
there's a
Absolutely.
lot of factors at play there.
I
You
think so
know,
too, and I do think it. I mean, obviously, incentives like this are typically there. They're incentives on purpose, right?
right?
They're to
Yeah,
incentivize something, um, and changing that can have a big impact on a lot of things that maybe we aren't even thinking about right now. So who knows
most
what
definitely.
that'll be? But we'll see how that goes and see whether this is another bargaining chip in some other type of ploy. So we'll find
Exactly.
out. Jay, did you know? Did you know the folks at FinCEN, they wanted to make sure everyone's still aware We recognize that BOI filing is under injunction, and you don't have to do it right now. But FinCEN does want you to know you still can. Um, so you can voluntarily file your BOI reports if you want to. Jay and I have talked about this over and over and over again. Um, eventually, something's probably going to come out of this. Do you need to do it today? Not necessarily, but it isn't that hard, and you're just telling information that you already have told. So maybe don't worry about it as much as some of the news out there is maybe making it to be. So we'll see. We'll see what happens there. But FinCEN said, hey, you can still voluntarily file. So if you're interested in that because you still haven't done it, and you're like, yeah, you know what, maybe 1231, might as well just get it done. You can. And then one final tax story. It has nothing to do with U.S. tax, but I thought it's always fun when corporate cheats get busted. And so in Denmark, there was a Danish tax issue. Apparently, there was a $1.3 billion scam that a hedge fund leader kind of was the ringleader of around some dividends tax refund applications. Now, I don't know all of the details of this, but they caught him, and they've filed suit or whatever you do in Denmark against him. Some of his cronies, or some people that were working on the same scam, have already been sentenced to some jail time. And this guy, just to be clear, to both sides here, he says he was just taking advantage of a loophole. And so it sounds like he thinks he was just stretching the law. The law thinks he was cheating the law. The Danish legal system will work that out. But it's always good to see across the world, like people getting busted for their misdeeds, and especially when you're taking advantage of taxpayer funds like this, and especially as like a business leader, like that's a really lousy look. And so it's, at least from my perspective, it's always good to see those deeds go appropriately punished. So if it turns out that this guy did do some cheating here, I hope he pays that price. And then I know that we talked last week about how the IRS has done a lot of similar enforcement here in the U.S. I would say the same story for those ERC cheats here stateside. So always good to see the enforcement agencies enforce the rules. That I don't think anybody would argue that that's a good thing. Maybe unless you're the one getting busted.
So that issue I was telling you about before about my daughter, she's pinging up,
Yeah.
just blowing up my phone right now. So
Right.
just throwing it out there. But
Family.
they have busted a ton of ERC fraudsters. Have we
Right.
heard the penalties that they've been paying? Are they going to jail? I mean,
I don't know about jail time. I know there's been a lot of taking the money back or attempting to take the money back, that kind of thing. But I don't know if we have too many hanging out in whatever Rikers or wherever you put these books.
Right.
Probably not Rikers. That's a really bad joke. Sorry. Wherever they end up. Probably. Yeah. I don't know if that's what we're doing here, but that's what they're doing in Denmark.
Yeah. Well, the world doesn't take tax cheats. Yeah. Well, yeah. They want you to pay.
Right.
And pay in blood.
Yeah. Or however it needs to be. Right. Well, that story is the end of the tax news. In other accounting news, we'll start with the acquisition and financing corner. Interestingly, I thought Moss Adams acquired a leading Salesforce consultancy, so they're expanding their offering, and so I think that is a thing that firm owners really want to be thoughtful about. Is as you go from just being compliance or moving away from compliance into advisory, there are a lot of things that are complementary to accounting services, and that can include Salesforce consultancy. So there are just a lot of different areas where your value can be added, and so be thoughtful about what that looks like. And that's the reason why I wanted to bring that story up today.
Yeah, well,
Uh,
Salesforce is more than just a CRM. I mean,
yeah,
we have a client that they operate their entire business on Salesforce. Every invoice is generated by Salesforce,
right,
and it's the total center of their business.
right,
So,
yeah.
it
Um,
takes an effort.
yeah, to make sure that it's working properly, to
Yeah.
implement it properly. This team actually has a couple different applications that they've built that integrate directly to Salesforce as well. So they're working on that. It was looked like a Loom integration and a few other ones as well. So those are fun like integrations that come out of that process as well. So again, you can provide a lot of value in ways that maybe you're not thinking about when you're really just focused on completing compliance. Um, but there are ways to grow. Um, I also saw that Ascend acquired a Boston area firm, which expanded them from Virginia into the Boston, Massachusetts area. Now, Ascend is a company that's supported by private equity, and so I thought that this was interesting or important because it is another reason why this will be happening overall, right? And this, I think, was maybe one of the early versions of this to occur, where that newfound capital that we've talked about that PE provides for you, it allows you this opportunity to be able to acquire firms that are similar to yours to help expand your growth reach so that now you can touch different areas of the country. And so I think that if I've just missed them all, that's one thing. But I think we'll see a lot more of this type of thing. What is like a not necessarily a roll up, right? But functionally one where the PE group is taking a bunch of different similar firms, stacking them all together. So I think you'll see this more frequently. And as we've talked about, like that, if you find an opportunity where that makes sense for you, then private equity investment or getting that extra capital that way may be really valuable for you. Um, if that isn't the option that you want to take, I saw, and this is the second time at least that I've seen this come up, Franklin Alliance is offering some alternative investment options. Now, based on what I was reading on their page, it just seems like maybe it's a private equity company that doesn't want to be private equity. But they market themselves as an accounting support company that allows you to get additional financing through other options, right? So maybe they're a lending company or something like that. I don't know all of the details of the Franklin Alliance, but that is another option, right? Even if they are maybe not like private equity, but just alternative equity. Like that is a different thing that's out there. So it's if private equity, like to true private equity venture capital, like if you start to see that being successful, and especially some successful exits, some other strategies like this are almost certain to come right after, because anytime that there's some profit in what's going on, you'll see more and more activity in that space for sure. In extremely positive news, Jay, the average audit fee was up 6.4% in 2023. Now, I know that's a little bit dated now. It's pretty stale, but that was per FEI research. But more importantly, client accounting services or CAS or the outsourcing of accounting, that's up 17% per AICPA benchmark surveys from this past year. So that's recent. And that just goes to show you that if you aren't supporting that advisory portion of your practice, you should be, because it's continuing to grow. And so 17% growth is a really big number.
That's a good clip.
Yeah, and that is something that I think that you'll continue to see, especially as companies are looking for ways to potentially like cut a little bit of cost here and there, that kind of thing. That benchmark survey also highlighted 7 other insights that I think actually we'll talk about on the show on another episode, but we won't talk about today. That are related to client accounting services and how to think about that practice line for yourself. A few high-level notes. We'll just bang these through. AICPA released a valuation guide for business combinations. I think we'd mentioned this before, and so I don't know if it just was preliminary before and now it's a final version, or if it's an updated version or something like that. But know that if you are assisting companies with valuing intangible assets in a business combination, there's some specific guidance out there that can help you to do that. I recognize that this is an advisory service that you could offer, so know that there's some help there from the AICPA. our folks at the PCAOB back in the news. They mentioned, and I can't believe this, Jay. This was not the kind of thing you typically hear from the PCAOB, but they said there were significant improvements in the largest firm's audit quality. So all of that hand slapping that they've been doing over the past few years, they must have worked. Or at least, yay! Good job, everyone. Audit quality for the win. So I didn't read into that report very much, and I haven't heard anything more about it. But hey, if they're saying significant improvements are happening, that's positive.
Well, given the quality of the last couple of years, there's only one way but up.
That is true. That is true. Couldn't get much worse. Um, COSO also published a framework for internal controls over robotic processing automation, which is a super interesting development to see. I think that you'll see something like this probably published not too far from now around artificial intelligence and generative AI and that kind of thing as well, for understanding how companies should be controlling those processes and making sure that they're not being manipulated or used in a way that's misstating financials. So this is a really important development because building out a framework around what that looks like is really important to making sure that people are developing the right sets of procedures to make sure that all the automations and stuff that they're using to get all their time back are working appropriately and not just making a big mess of their financials. So good to see that. And then a couple final notes over in the UK. They are increasing the company size for audit filings. So there's a specific threshold that needed an audit filing, and it seems like it was pretty low. Like they do lots and lots of audits in the UK. They're ticking that up, and so I don't know if that's related to some of the like more broad problems that we've heard and talked about across the accounting profession, where they just don't have enough people to do those audits, or if they found that like the smaller companies have been, the burden is a little bit too high, that kind of thing, where they're spending more time than they need to on compliance, and just not really getting any value out of that extra compliance level. So I don't know exactly what's caused that, but I'd love for some of our friends in the UK to chime in and tell us a little bit more about what's going on there. And then finally, in other accounting news, you will probably have been aware, and we didn't mention this previously, but there was a report of a $150 million fraud at Macy's, where a single employee, one person, was accruing for small shipping charges from 2021 through like nowish, and accrued up $151 million personal slush fund or something, I guess. Man, is it a bummer when that kind of thing happens. So all the more reason to make sure you have good oversight related to your internal controls, and that you really understand what's happening within your accounting system, so that when accruals are being made, that they are being made appropriately, and when spend is happening, that it's being managed appropriately as well. So
I heard that was in a separate ledger to boot.
Oh, I didn't read that much, but that would be real fun, huh?
Yeah. And
buddy.
No payments were ever made on any of these accruals. So, it came in under materiality, but ultimately, your accrual never got reversed. So, wouldn't you be looking at that?
You would have thought so. For
my bigger question, though, is what was this employee's motive for doing this?
It's a good question.
We still don't know. So
yeah, maybe hopefully we'll find that out. Yeah. But yeah, it's pretty wild. Anytime you see numbers that are that large, that is impressive number. Just like those songs, Jay. Just like those ringtones. That was our accounting news.
It does say "do not disturb," by the way. I don't know why that rang.
Hey, that's okay. Finally, and this will be really brief because the tech news this week was pretty light. There's a couple different expansions happening, and I think that that's important to note, not because of what they are. Bill's adding 1099, Zoho's delving into payroll. I don't think like those things on their own are all that interesting, But the fact that these companies are offering these expanded service offerings, that is a lot more interesting, because I think that you will continue to see this, and we actually may even talk about this a little bit more later. You'll continue to see some consolidation, where you can find all of the things that you need to support you and your clients all in one warehouse, right? That's kind of the idea here. They want to be your one-stop shop. Bill wants to be able to do all of your payables management and all of the things that go along with payables management, in one place. So I think we'll continue to see some consolidation or some add-ons to different products and different services in this space, which as we've talked about several times, is always great, because as you start to have the competition, and you start to get better and better products, and when you get better and better products, that's always good. So looking forward to that. And this week in AI Corner, Jay, there was nothing. I did not find a single article about an AI bot or an AI assistant or anything like this, except for the virtual assistant that the IRS was doing. And I must have missed it or something, because that just doesn't even seem right. Yeah. Maybe everyone's taking off Christmas time.
Maybe. But jumping back to that bill expansion.
Oh, yeah, sure.
So, it's interesting that they're doing that now, since their main competition launched that earlier this year. And, there was really no competition for Bill.com for a long time. Or, excuse me, just Bill. Sorry.
Yeah.
And, for years, you'd go to a trade show and, we're going to be in payables automation. It's like, it's 7 companies this year, and then next year there's 7 companies, but completely different companies. And it's been one of those spaces where they've held the monopoly for a long time. Right. And Ramp has caught up, and they've surpassed Bill, I think, as far as their service offering goes. And now Bill's trying to play catch up. And it'll get interesting. That's all I got to say about that one.
Right.
25 will be an interesting year in that space.
There's no question. The good news is that as these companies continue to innovate and compete, that becomes all that better for both accountants and clients.
For sure.
So shout out to Ramp for being inspiring to Bill in this space, and shout out to Bill for being responsive to this. That it takes some guts to develop a product. We'll see how good it actually works, and whether they grow to regret it. But it's always great to see companies adding on different features and functionality, especially those that support their accounting partners like this. So I think this is a good thing. Okay, and that's our tech news. So on to our main discussion. So I was reading articles, right, as I do in preparing for the show. And one of the articles that I read was highlighting 5 trends going into 2025. And they were, like fine trends, right? Like emerging technology and remote work and versus hybrid and all of these things that actually seemed like a list from like 2020. Yeah. And so as Jay and I were talking about it, we were like, you know what, we should probably modify that list and talk about the things that we see as trends that to expect, and things to look forward to in 2025. And that's what we're going to do today. So here we go. The first trend is an emerging technology. It's not really all that emerging anymore. In fact, if you're a regular watcher to the show, you know that it is plateauing, and that is artificial intelligence and artificial intelligence.
Plateauing.
That's right.
Yes.
I still just a joke on a joke. I can't believe that. Can't believe they said that. But artificial intelligence in accounting is not going away. Right? We made an entire corner for it. We talk about it all of the time, because there are always, except for this week, I guess, there are always things going on in AI that are continuing to improve products and continuing to make work that we're doing, complement work that we're doing, and make it easier, make it better, make it more powerful. And that's not going to change in 2025. And in fact, there are a handful of different things that we want to highlight for you as things to expect. The first one will be AI-driven bookkeeping. And so there are some products out there right now that are utilizing AI to help evaluate transactions, to help highlight for you that we expect that this transaction falls here. So that automated data entry, transaction categorization, and then of course the bank reconciliation that goes along with that. I think you'll continue to see change and improvement in this space, where those transactions get better and better and better. And Jay, what do you got to say there?
Yeah, I'm just going to say I think 2025 is going to be the year we see this in full swing.
Yeah,
And yeah, out in the wild, not just behind the curtain. I think we're going
right.
to see it launched and everywhere next year.
Yeah, and so and like we've just talked about with Bill and Ramp, once somebody gets one to market here, it's just going to probably be a
Yeah,
flood of them, especially if they're integrated within the accounting systems. I think you'll see that happen a lot. Then, in addition to that, on the advisory side, predictive analytics. There are already products that exist in this space that are using AI to help to forecast cash flow, to identify trends, to help you identify and mitigate financial risks and give you that insight that way. Um, in 2025, the expectation is that more companies are going to be integrating tools like this, and those tools that are already out there are going to continue to get better and improve as well. And so I think the main idea that we still have several things to talk about here, but what will come up over and over and over again is if you're not thinking about how you can use tools like this to improve your practice, you are going to be behind very quickly. And 2025 might be the year that you get behind the most quickly because the efforts that people will be going through are going to be significantly impactful to your practice and the work that you're doing. Now, from a product perspective, you'll continue to see the thing that I joke about, and that's AI chatbots. Right? They'll keep getting better. They'll keep being introduced, and then a couple of things that will probably happen is that you'll find that they will enhance your client communication, and they'll do that by providing like instant answers to questions people will have. And so when I think about this, the example that just comes to mind first and foremost is Jax. So just ask Zero. That tool will allow customers to be able to say, "Hey, I need this invoice. Where is it at?" Or "I need this type of data. Like, where can I find it?" And all of a sudden, they're pulling that for you, right? That tool is going to help to support you, and that is, it's not, it's not just, a chatbot. It's an interactive tool, and I think that that's an important thing to remember.
and it's not only going to give you that invoice; it's going to allow you to create that invoice as well.
Right.
So
Yeah.
on the fly, you're at a client. Let's say you're a locksmith changing their locks. Hey, Jax, I need an invoice for Chris Geno for
Right.
$400 for changing 17 locks. And
Right.
next thing you know, Chris has an email, and he can then go on Apple Pay, or excuse me, whatever pay he has on his phone, and pay that invoice.
Right.
Sorry, I know you're not an Apple user.
No, I'm not, but a lot of people are,
Yes,
and it won't be just that, right? Could be GPay, could be Shop,
exactly.
it could be anything. There's
Right.
just a wide variety of payment applications that will be introduced into these as well. And so think about what that means from both a like how your client manages their business and what you need to know as the advisor to this person, right? So number one, you need to advise them that this is an option. You need to let them know that this is a thing that's going to be happening, and importantly, you need to understand how it works. So if it so that you know what to expect on the accounting side, like where that transaction is going to post, whether it's going to post in draft, whether it's going to, and you're going to need to like have some integration, or what's going on there. So you can't just be blinded to this. You need to fully understand how these products are going to be integrated. And it's exactly what we were just talking about, actually, from COSO with the internal control summary for RPAs, right? For those robots. Same idea here, right? This is a new technology. It's a new way to utilize it, and you need to make sure that you understand that the data is getting where it needs to properly, so that you can ensure the accuracy of your client's reporting, and that can be a really important thing. One other area where we'll continue to see AI improving the accounting space is in fraud detection. So utilizing AI to identify unusual transactions or unusual patterns or discrepancies in financial records might help us to catch that
Hello,
100.
Macy's.
Yeah, it might help us to catch that $151 million. Exactly,
Yeah.
exactly. So they're like the tools that exist, that those predictive analytics, they can do this backward looking information too, right? Like they can tell you this is really unusual and we need to like highlight this, we need to spot this for you. And as they continue to get better and have more data and are supported more powerfully by the community at large, they'll get better and better and better at spotting these things for you and identifying where you need to look in these areas. And again, they're not taking your job away. What they're doing is empowering you with information that you can then use to highlight your value. So instead of having to go through all of that detailed analysis on your own, the AI tool is going to help you to do it, and you can still provide the same advice, but you didn't have to do all of the underlying work because the tool did it for you. So that the amount of value that can come out of tools like this, and like, is really, 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 really powerful. And then finally, in the AI space, the integration of other AI tools. So if you think about ChatGPT or Claude, how they can supplement your day-to-day accounting tasks, how you can utilize them if you aren't already to continue to provide better solutions. And in fact, I just did this last week myself, or over the last week. I did it on Friday, where I asked ChatGPT for a little bit of information. I had something that has taken me forever and ever and ever to do every month for the past like 25 months. And I was like, man, this is really annoying. I should have asked about this a long time ago, but ChatGPT, here's what I'm trying to do. Can you help me like figure out how to build some code around this, make my job easier? And ChatGPT like very pleasantly was like, you know what? Absolutely I can. And I'm so glad to help. And here's what you need to do. And the thing that I love about this tool is that, or these tools more broadly, right, is that they're starting to be integrated in those things that you use all the time, which means now that instead of having to go to ChatGPT, you might even be able to just ask Copilot right there in Excel and be like, hey, I'm trying to do this thing. Can you talk me through what I need to do here? I've never really used Power Query before, but I know I can use it. How do I implement that here? I know I'm getting external data and I need to bring it in and I need it to be clean. Like, what do I need to do? And these tools will be just right at your fingertips, where it's very easy to start to integrate them in your day-to-day activities. You can think about that from building a draft version of a response to I don't know, a solicitor's email or something, where people are asking you, for your time or your time on the calendar or something like that. And Jay, I know I'm spoiling at least a little bit of what I know you've talked about doing or have already implemented, right? Like there are so many functions that AI can do for you that 2025 will just be a continuation of people being like, you know what it can do? It can do this, where you never really thought about it before.
Yep.
And as people start to do that more and more, and that just kind of infiltrates itself into the community space, I think we'll continue to see higher adoption rates, and then also like more powerful utilizations that will become mainstream in 2025.
Yeah, and along what you were just saying, you could triage your email and, get rid of those emails you don't care about, and then take those emails that you have to draft a response to, put them in a specific folder, and have make.com looking, and I'm probably spoiling the next item too now that I'm looking at it, but your example fit perfectly. So
Right.
you grab that email from that folder, pull it into Make, let it read that email, process it through ChatGPT, have it create a response, and push the draft right back out into your email. That way
That's
you
right.
can go out there, read it, proofread it, make changes to it, and send it. And that way, you're teeing it up to make yourself more efficient. And,
That's right.
It works really well.
Yeah, and that's an area. That's area number 2 where we expect to see some additional trends in 2025, and that's in automation tools and efficiency. Now, some of these things are going to be coupled with that AI, right? AI is empowering some of these things, where people weren't thinking about it before, or the effort that it took to be able to do these automations was significant prior, but now has become easier because of some of these AI tools. And that starts with workflow optimization. So exactly what Jay was just describing, using tools like Make or like Zapier to connect apps and automate those repetitive tasks. I think we'll also see some automation in the tax compliance area, where sales tax reporting or filing across a lot of jurisdictions, like some of the way that those things will connect to platforms, will start to be automated and easier to handle. One thing that I think will be interesting is in document management. And so if you think about the like OCR techniques, right? Everything that underlies things like HubDoc or like Bill.com, where there's an automation of the receipt and the processing of invoices, and all of those things that Jay just described with Jack's doing, where you can take information from someone's payment immediately and just process that. Those workflow automations and document management automations are going to continue to get better. And so as those tools continue to adapt and develop, you'll want to make sure that you're understanding exactly how that's working, and do your best to integrate them effectively into your own practice so that you can take advantage of that. Other tools that will continue to improve efficiencies, and I think these are really, really powerful ones, are real-time reporting tools. So things that automate dashboards of like what your sales look like and what your KPIs are for the current week or month, and other financial insights that can be important in decision making. So as we've talked about here a lot, like the easiest way that you can provide value is giving your clients an understanding of the different options that they have as far as decisions go, and allowing them to make those decisions more quickly and being more responsive. And so as you have better automation and efficiency tools, empowered by AI or otherwise, you'll be able to do that more effectively through real-time reporting. And so that will continue to be something that I think that we'll see more frequently in 2025. And as those types of things like predictive analytics and automatic reconciliation and that kind of stuff that underlie accounting systems, as those get better and better, then your real-time data is going to be that much better too. So I think that's a thing that you'll want to make sure that you are really on the watch for in 2025 as those things to continue to improve. And then all of these things, as you're working on automations, as you're working on building efficiencies, a lot of them go toward employee workload reduction. And so that takes all of the manual tasks, all of the administrative stuff, not all of it, right? But you take a lot of these manual tasks, you take a lot of these administrative tasks that are manual tasks, and you start to automate them. You start to make them easier. You start to free up time for more strategic work. And as you do that, that gives your team the opportunity to provide value as well. And so now it's not just you providing value, it's your whole team being able to spend more time thinking strategically. And so as we roll into 2025, I think that probably will be the theme of the accounting profession for 2025 and probably the next few years, is going from this record keeping group, right, an accounting record keeping group, to a strategy group. And so being able to do that both for your team and yourself is going to be critical.
But there is a negative to this employee workload reduction that we discussed yesterday.
Yeah.
So we're starting to see a knowledge gap. So lower level accountants, as accountants are coming out of school, they're not getting some of the knowledge that they were getting in the past because some of these jobs and tasks are being automated. So we can't forget about that. We have to still maintain delivering knowledge to those entering the accounting field.
Right. So, and that becomes really important from the consideration of upskilling, right? You're going to want to be able to take people who maybe are doing some of this work that becomes a little bit more automated and give them the opportunity to be more strategic. But that also means that you have to take those opportunities to do so. And it isn't just something that just happens from, like Jay is talking about, right? It's something that needs to be developed. And so it's interesting because it isn't part of our list here, but I do think that you'll see a takeout of this, that like the building out of upskilling and the improvement of strategic thinking are going to be like really, really important factors that accounting firms are looking at and thinking about in 2025 and beyond. So definitely be thoughtful of that. The next thing that will continue to continue to improve, and again, a little bit of this is underlined by some of the AI improvements that are happening as well, but that's advanced data analytics. So there are so many tools already that exist that build custom dashboards. Those tools are just going to continue to improve. They're going to allow you to build tailored reports where you can track KPIs like revenue growth or profit margins or inventory turnover or ROAS or whatever other type of KPI that's really important to you or your clients. You'll be able to track that and in real time, like we just talked about. So you'll be able to give your clients a specific dashboard that allows them to see the things that they care about the most. And when you think about what that means, like the implications of that, like that is a huge value driver, because you're helping to provide those business owners with the decision making information that they need. That will come in a couple different forms too. Those dashboards they're just not always numbers. They will also be data visualization, right? And so there's going to be improvement in tools around that. Tools like Power BI or Tableau that can make data insights like accessible and actionable, where you can take that information that's a number and turn it into a beautiful graph, or compare that with competitors that are public companies or guideline companies or anything like that, right? Where you can start to show business owners, here's where you have your value, right? Here's where your competitive advantage lies. You need to take advantage of this. Like there's so much power that can come out of being able to provide a visual representation, because not everybody like learns by number, right? Sometimes the pictures are a better way to do it. And so we'll continue to see improvements in these types of tools. Like we already mentioned, that this one of the areas where this is going to be is in predictive models. They're just going to get better, right? They're going to get better in making data-backed decisions around inventory, around pricing, around budgeting, around all of that different type of stuff, where with more information, with more quick access to that information through some AI and automation, you're going to be able to make more real-time predictions of what's going to happen, and they're going to become more precise, which is great, and definitely something to look forward to, especially as you continue to be a strategic partner.
It's gonna allow you to jump right in with your price changes and not to have to do that A/B testing that we've been talking about doing all along. Whether to price this product at this level or this level, or what should the proper mix be. It's going to help you with that, so you can get that, implement it, and drive those numbers. So it's going to be invaluable.
Right, absolutely. I already mentioned it. I didn't even realize I was doing it, but one other area that's going to happen is in benchmarking. So that data, as it's more out in the community space, is going to become more available. There are tools out there right now. I listened to a podcast that was sponsored by PeerView, who does some benchmarking data too. And so products like that are going to continue to get better. They're going to have more numbers and more data points. And so if you think about financial analysis more broadly, it's data points that really drive the ability to predict something. And so as you have more and more data points, you're going to be able to predict and benchmark things better and better, which will improve decision making overall. And then finally, all of these things are going to lead together to the improvement and overall like better utilization of advisory services, right? That's the whole point of this, right? I think this is, like I said, from a strategy perspective, the thing that you'll see is that those advisory services are going to become more important as things in the lower levels of the chains become more automated. People are going to want to understand, like, what does that mean? What do I need to know now? And so using analytics to transition from that compliance focused work into that advising is just going to continue to be important in 2025. We saw 17% growth in 2024 in CAS work. I will be shocked if it's not higher than 17% in 2025 because of all of these types of things that are happening. Because there are so many different ways that you can touch this advisory space, just like we talked about. Like you could do it through Salesforce combination, like working through Salesforce, or working in other areas that you may be an expert in because you've seen it in a lot of your different clients. There's so much opportunity that to provide good quality advice, and it becomes so important when you're making those decisions that like there's just no question that this is going to continue to be an opportunity going forward. Next, then the next thing that's happening, or the next thing that's coming, is blockchain in accounting. And so, Jay, I haven't seen a whole bunch of conversation around this, but I am excited to, and have been excited for years actually, to see what happens as blockchain gets more embedded in overall accounting systems. Because
I gotta say, blockchain was emerging in 2020,
and Jay, I don't
2021.
know if I can't hear you or if your headphones have cut off or something, but I
No, my headphones are good.
what you're talking about.
You can't hear me, huh? Might be a good thing. I'm pretty sure I'm coming through. So why don't you continue?
Oh well, I can't hear you, Jay, so I'll just continue going on here. Some of the things that blockchain can do and it can allow for you is transparency, and that's transparency in a lot of different factors in a lot of different ways, because that transparency allows audit transparency, and so that's one of the things that I've talked about as one of the reasons why I have had interest in moving away from audits in the first place, is because this transparency is going to just become that much more clear as the transactions are just known. You're not going to have to confirm AR because you're just going to know what the AR is because it's right there in the blockchain. And so this opportunity gives you a true ability to be able to have transparent underlying data, which can go a significant way in making everything easier, and probably helps with that 151 million on the Macy side for sure. You'll also see new styles of contract. So this will be an area again where you can provide a lot of advice because smart contracts will start to happen that can automate, your contracting process. They can trigger payments and those types of things using predefined conditions and all of that kind of stuff. And so there's a lot of interesting information that can come out of that space as well. And Jay, you're back.
You can hear me?
I can hear you. I
That's
can hear you.
so
I don't
weird.
know what happened. That is weird.
So weird.
But,
Yeah, I was just trying to see if it was coming through, but yeah. So I don't remember what I was trying to say earlier, but what I was saying was blockchain was like emerging 2020, 2021, and it
Right.
slowly fading away. And now, in the last 6 months, hearing more and more of a resurgence and more
Right.
technology being built on blockchain. So, yeah, I really think we're going to see more and more of it in 2025 and get to that
Yeah.
level it was expected to be.
Yeah, absolutely. And you'll see there's a lot of different things that come out of that too, right? We talked about transparency. One of the things that supports that transparency is the real-time ledger update. So it
Hmm.
kind of just makes those things happen immediately as you're just connected to it directly. You'll also see like assets being valued pretty instantaneously on the blockchain. So between cryptocurrency accounting or other like NFT style stuff, so other digital assets, you'll be able to understand some of the valuation of those potentially, but there may be more challenges in like being able to identify real-time value, understanding all of the tax compliance and the reporting. And so there are lots of tools that are out there now that will become that much more valuable as blockchain technology and the assets that go along with it continue to be utilized more frequently. And then finally, when blockchains do, from a transparency perspective, they help to limit and and change the way that fraud can happen. So they can prevent fraud by just decentralizing like the transactions to make them more secure. Because once you layer them in, you can't change it anymore. And so as long as those things are true, they're going to be there to help make sure that those transactions are recorded properly. And so there's a lot. And we could probably talk for hours and hours and hours about the implications of like a highly effective blockchain on both the accounting space and the world more broadly. Um, but that's not for these. That's not for today's show. That may be for another day's show. And then the final trend that I think that we've talked about since January of 2024 when we fired up this show, and that's that the regulations are going to continue to change. That is global tax, not just here in the United States, right? Keeping up with international tax law, but also just keeping up with U.S. tax law is going to be a challenge and something that will make tax professionals continue to be valuable because there is so much complexity around the way that that's doing. Obviously, we've talked about how cybersecurity is so important, and guess what? That's definitely not going to change in 2025. Data privacy and security, navigating those regulations that go along with that, like all of that's going to continue to be something that's important, challenging, and an area where accountants will be uniquely set up to be high quality advisors because of the understanding of how those things are working and what information is being swapped. It won't apply to everybody, but it will continue to apply across both here in the U.S. and especially for bigger companies here, and then also across the world as continued regulation changes around this. But ESG reporting is going to continue to be updated, to be changed. I know we talked about how this was changing, and I think it was France. To change some of the reporting there in France to require additional information, right? So there's going to be more requirements around environmental regulation, around social change, around governance in your business, right? That's going to continue to be important, and it's going to continue to be an area where, again, accountants are uniquely situated because of all of the information that we're privy to, and also all of the background understanding of the business that we have to provide good quality advice. We talked about cryptocurrency, and so as that continues to be an important area of important playground, with Bitcoin up over $100,000 a unit, and other digital assets and digital currencies, especially as we continue into this like worldwide currency space, that digital asset and tax compliance around it is going to just continue to be important. E-invoicing, real-time tax reporting, like all of those things are going to be things that are going to start to impact how we are managing our businesses as well as how we're advising clients in 2025. And then finally, and I don't think there's any question here, and obviously not everybody deals with this in the same way, but managing your remote workforce and understanding the compliance aspects of that will continue to be important in 2025. If the past few years have told us anything, it's that you can work from anywhere, but managing that payroll and the tax liabilities around it with a world that just has teams that are all over the place, it gets more complicated. And so there will continue to be some complications, challenges, and other areas where you'll want to make sure that you're well versed and understand appropriately how to manage those processes. And so regulations will be changing. We know with almost 100% certainty that there will be some type of tax change, and in the early parts of 2025, hopefully, so that we can plan appropriately. And managing that, as well as all of the other things that we talked about today, is going to continue to be a trend in 2025. And so, Jay, to summarize real quick, right? AI and AI in accounting specifically is going to just continue to be important. It's going to facilitate automation tools and efficiency, as well as advanced data analytics, which will improve on their own, but will improve that much faster because of some of those AI tools. We'll continue to see an uptick in the utilization of blockchain to support accounting. And then, of course, the regulations are changing regularly. And so those are our 5 trends for today. going into 2025 that Jay and I think are things that you need to be on the watch out for, and also some of the reasons why. Jay, do you have any extra thoughts on 2025 and what we need to be prepared for?
Well, first thing is I'm going to archive this video so we can pull it out the last Tuesday of the year next year, so that we can compare what actually happened
Ooh,
with what we said.
I
So
like that.
I think this list was pretty spot on. And you know, looking forward to seeing these changes because we've been talking about a lot of these for like 10 years now, and we're starting to see it settle in.
Right.
And the big fear was AI and the robots were taking our jobs, and it's not. I mean, AI is enhancing our jobs.
Right.
It's helping us. And the people it's going to affect are those that are not willing to adopt it. So, like everything in accounting, change is good. But we are the most change adverse group that there is. So
Right.
we just have to accept change and adapt to it. And, we'll see where this takes us. So.
Right. Well, I can't wait for 2025 and all of the neat stuff that's going to happen. The extra automations that I employ are might not even have a number associated with them. I'm going to lose count in probably like February, because I have had such success at the later part of this year in doing that, and so I can't wait to see all of the different things that come out of other platforms as competition continues, as companies identify the powerful ways to use things like AI and like automations, so that workflows continue to improve, and we can continue to provide even more value to people by just highlighting for them how to get data quickly. So can't wait for 2025. Jay, do we have an automation of the week?
So what I am working on now is kind of the next step of what I was talking about last week. I'm pretty sure I was talking about building a video avatar with speech. With,
you did.
The voice that I made. So,
right.
So where I am seeing that right now is coming off a signed engagement. So we have a signed engagement. We send out a welcome letter, a welcome email. And that welcome email will be a video avatar of me, of you, whoever that person is that had sent that engagement letter. And it will be a personalized response. It will mention the client by name. It will go through some of the aspects of the services we will deliver based on the engagement letter and set expectations and set the route for the engagement. So that is what I'm currently working on. And I'm excited. It's fun stuff.
Yeah, I can't wait.
It might take me through the holidays to get this one done.
Hey,
but
that's
we come back in 2025, AI and automation, we're going to have it for you.
Love it. Can't wait for it. Can't wait for 2025. Jay, I know we're definitely out next week on Christmas Eve.
We are.
Are we planning to be out on New Year's Eve as well? Or are we going to be here on the 31st to ring in the end of 2024?
I just got usually New Year's Eve is a big day here. We usually have family here, just like we do for Christmas Eve. We have a big sleepover, a big slumber party. So I don't know. It might be cool to do it anyway on New Year's Eve.
Yeah, sure.
But yeah. Beverage in hand.
Yeah, we'll have to figure it out. We need
so
to get
we'll
all
keep you posted on that one. Yeah,
we need to get all Lang Syne in the Ergata or whatever Oh my gosh, Ergato, so that we can play ourselves out. But if we don't make it back on New Year's Eve, thank you all for joining us on our journey here through 2024. Like we mentioned, there's so many things that are exciting happening in 2025. We're going to be right there with you to talk about what you should do with them, to highlight for you things that we think are interesting that are happening in the news, and then to help you make make your firm the best firm that it can be. So thank you for joining us on the Practice Playbook. We'll see you maybe again before 2025, or maybe we'll see you in the next year. Bye, everyone.
Happy holidays, everybody.
Yeah,
We will
happy
catch you
holidays.
soon. Bye.
Bye.